Hey everyone, it's Evan here from the Trade Risk on Wednesday, September 27th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. If you're brand new here, thanks for tuning in. Thanks for watching. Do subscribe to our channel on YouTube if you like these videos. Just keeps you up to date with all of the latest that we put out. So we're going to jump right into things today, looking at the cash market, S&P 500. Still going to stick to this, the SPX, just to alleviate some of the dividend skewness in the SPY ETF. And you can see today all-time closing highs here in the S&P 500, over 0.5% to the upside, 13 handles here, and the bulls still very much in control here. If we go to the weekly chart, you can see here up 31 basis points on the week, and we're right at just above last week's highs. We had a very, very narrow range week last week, and you can see we're starting to break back above that. It wasn't without some turbulence to start the week. We did have Monday's session, which did kind of drive us down about 20 or so handles here in the cash market S&P 500, but we've recovered and we've pushed to these new highs here. Now, I think the market's at a very interesting spot here. I got sort of a lot of different sort of points I want to cover in this video. So the first all-time highs here in the S&P 500, that of course is bullish in itself. The trend is higher, of course, and momentum accelerating a bit today. Started to weaken to start off the week, but you can see started to pick up a little bit of steam, kind of flatlining, maybe accelerating a bit here on the S&P 500. But I think the real story, you have to go under the hood. You have to look at the different sectors, and you have to look at market breadth. I think those two things are very interesting right here, because the market is so masterful at this rotation game, and it can get misleading to only look at top level indices because they may not be painting the entire picture. So the S&P 500, let's leave this here. Let's get into the IWM, and we're going to sort of continue with this narrative here. But the Russell 2000 had a very incredible move today, up 2%. And the reason it's so incredible is because it's already had a hell of a run here since the August lows. It's been basically on a multi-week V-shaped rally. You can see a tremendous amount of volume coming in, basically the highest volume day of the year, if I'm not mistaken. Yeah, you have to go all the way back to election time of 2016 to get volume of this size coming in on the IWM. Now, that leads me to think, after already seeing a move from 134 to 145, an 8% rally or whatever that figures out to see a 2% sort of upside acceleration higher on this uptick in volume, really stretching away from the 8-20 period moving average. Is this some type of blow off here, or is this the start to a more sort of accelerated and leadership role by the small cap stocks? That's something I don't necessarily have the answer to at this point, but what I do have the answer to is being a short-term or short to intermediate term swing trader, an active trader, this is not the spot where I am much interested in putting on new exposure. To me, I am sort of in the let's sell and trim our winning trades, that mindset, as opposed to looking at this saying, okay, we got the volume breakout to new highs here, time to go. So that, I think, is a point to make, is that the Russell 2000s had an incredible run. It's now probably about 10% from these lows. And with this accelerated volume, with this uptick here, I think from that, again, short-term tactical cash flow sort of trader perspective, this is a spot where I'd want to be much more cautious and selective on the market versus piling in here. Again, longer-term time frame, if you're employing sort of different strategies on trend following basis or something long-term in nature, position trading, completely different. And I totally get that this is a encouraging look here by the small caps. Okay, and now let's look at, round out our discussion here on the Nasdaq 100. You can see the Nasdaq up 1% here today. The Nasdaq 100 had a nice sort of follow-through day to yesterday's stabilization. It was a tough start to the week. We're down 1% on higher volume in the Nasdaq 100, stabilized Tuesday, follow through today. So this sort of brings me to my third and sort of final point here for the market environment, but we had the Nasdaq 100 up 1%, nearly 1%. We had the Russell 2000 up around 2%. We had the S&P 500 up 0.5%. So we had some great returns across the major averages. When I look at something like breadth, however, breadth today, to me, the way I interpret it, and there's a million ways to interpret it, had a negative sort of divergence, a negative bias. It was a bit sluggish based on the returns that we saw in the major averages. Now, today in isolation does not change a trend. Market internals have been trending up. There's been an expansion to new highs over the past several weeks. But when I look at market internals as I do in cycles, and if you go to thetraderisk.com, I don't know that link off the top of my head, but there's a lot of material there where I sort of discuss and outline my process on this. But when I look at market internals in a cycle standpoint, we are at an extreme in this latest upcycle. And given the fact that we're starting to see some more divergences like today creep in, this has me on a bit of an alert. Combine that with maybe a little bit of enthusiasm going on here in the Russell 2000 after a multi-week move. These are things that start to, make me go into more of a profit harvesting mode rather than a, let's allocate more capital to the long side. So hopefully that gives you some more insight there with the market internals view at recent price action. If we go back to the Nasdaq 100, we got short the Nasdaq 100 here at the close or near the close of the day. This is an aggressive trade entry for us. It's an aggressive trade entry because it's in the process of rallying higher versus really starting to roll back over. So it is aggressive in that nature, but the rationale for doing so is partly due to the divergences we just sort of spoke about in the market internals. We also have the Qs here, which are the sort of the laggard of the bunch when taken in account of the S&P 500, which is at highs, the Russell 2000, which is at highs, Dow Jones is basically at highs. Again, this is the Nasdaq 100, so it's not the Nasdaq Composite, which almost made new highs today, but not quite. So the Nasdaq 100, though, you can see where this is on a relative basis. It never made new highs back here in September. In fact, it got pretty oversold in here, and it's bouncing back into a pretty difficult area, pretty messy area. It's got this downtrend line, which it closed directly at. It's got some of these fast-moving averages. It's got this kind of horizontal level, which has sort of been pivot highs back here in August. A lot of supply in here from early September and then some recent lows. So this general band up here around 145 or so, I think is going to be more or less my line in the sand here for the Qs. If we start to launch through here and just want to V-shape like the Russell 2000 just did, then I will be out of this trade very quickly. But for now, we're going to try and stick with this entry around 145. 6, call it, give or take, 145.50. If it starts to break back above there and challenge these old highs, then we'll be gone. But again, that looking at the volume argument that we sort of discussed last time, where a lot of these sort of distribution days coming in on this recent range in here ever since June, has me believing that I like this as sort of a favorable reward to risk ratio, getting involved here, maybe retesting these recent lows, maybe the August lows down here, maybe even fill this gap back here in July. And again, I'm not a huge bear. I know it spent the last probably 5 minutes on the bearish side, but really more neutral. We still have long exposure on. So the Nasdaq 100 short here is a good way to sort of hedge that up, get short a lagging market, and then trying to sort of manifest some of those divergences that we talked about earlier. So that is a trade that we just put on here for the Qs. We'll see how that works out. And that is a wrap up there on the market environment as a whole. Again, I wouldn't be surprised to just see more sideways and more kind of sector play, which we're going to get into later on, is sectors are pretty key here because there are such great divergences between them. So I think, more chop or more sideways, completely reasonable here as well. So let's get into some of the other major markets. We'll go to TLT, which had a pretty loud day. This was a very noticeable gap down today on higher volume, not crazy volume, but certainly higher volume, down 1.5%, losing all of the recent lows here, getting back below the 8 and 20 period. Back, of course, still and consistently below this trend line that it broke in early September. So bonds here very much in tough shape. Would not want to be trying to pick a bottom right now in TLT. So sellers in control there. If we go to oil next, you can see continues to kind of just smooth it out in this uptrend. So ever since really breaking out back here in early September again, oil has continue to just rise and mostly stay above the rising 8-period moving average here. So USO bulls still very much in control. Natural gas still just floundering here in this sideways range. It tried to get going here mid-September, failed back into all of this old supply, and now again, nice day, 2% to the upside, but structurally hasn't really changed a whole lot. I still like the potential for natural gas to be carving out a larger bottoming pattern, basing pattern here, but we still need to see that actually materialize, and it looks like it'll just need some more time. If we go to gold next, you can see had a tough day today, down 1%. New lows here, took out the lows from last week. Talked about this pullback to be sort of an interesting pullback to watch, to keep our eyes on. It's getting a little bit long in the tooth. We'd want to see this stabilize very much sooner rather than later if you're a gold bull here. But you could use this trend line here ever since topping out in early September as your signal that maybe we're breaking back out to the upside or getting back above some of these fast moving averages. For now, it looks like gold just needs a little bit more time still. Silver, pretty much the same situation here, still pulling back off of the early September highs. So those are the majors. Let's take a look at some of the sector analysis. And like I said, it's very, very split here. So if we look at something like XLI, I mean, look at this nice, just kind of straight line run higher since, basically all this month from 68, 67, 50, all the way up to 71. This has had a nice rally to the upside, continues to hold its leadership spot. Energy, which probably is most overdue out of all of these. We've talked about this now in the past several videos, but broke from this downtrend line that it was in for the entire year, and it's just been nonstop on the move higher here, and it continues to be with a very strong close up around 68.50 or so. XLF also breaking away today, trying to get back above, or in fact successfully getting back above the August highs here. 1% move to the upside after going sideways here, once again extending itself from the fast moving averages. Slightly higher volume today, so financials very much dominating the lead there as well. And finally IYT to the upside, breaking to new highs here as well, up 0.5% on the day. Lower volume's been actually pretty light here in the transports over the past several weeks breakout. Now on the downside, staples, we got defensive areas, right? Staples continue to be in a tough spot. Utilities continue to be in a tough spot. Healthcare continues to pull back as well. And technology, very similar to the Qs here, had a rebound today of 1%, but still on a relative basis is not making new highs like some of those other leadership sectors that we talked about. So I think sectors are very interesting now. It's a game of rotation, and it'll be very interesting to see if something like the XLI and the XLE, can they continue to plow higher, and can they offset enough of some of the more defensive areas of the market, and some that aren't so defensive like the XLK, can they continue to offset those lagging sectors? That's what we're going to be paying attention to heading into the remainder of this week, until the close of this week. So hopefully you guys had a good trading session. Hopefully you guys are having a good week. Thanks for tuning in and watching as always, and hope to talk to you again soon.